Hi guys, how are you doing? So welcome to the first edition of our trade recaps, and we're going to be doing the EURNZD trade that I took on 31st of August. That was the day before NFP last week. Yes, so it was a very simple trade I took. A few confluences I added in, a few concepts. Yes, we're going to see how I took this trade. Yeah, let's dive right into it. Yeah, so I'm going to go back to all the way to about 28th. So I did minus on the 20 on the 4 hour time frame, though I did take my entry on a 1 hour time frame. Yeah, so there's a trade I took in the Asian session on Thursday morning, very early on Thursday, because yeah, it's when I got my alert that price had reached the zone I wanted it to reach in. So to kick off, I'm going to give you a few steps that you can write down that shall be looking at that I'll be doing in most of my trades, and a simple glimpse of how I take some of my trades off the 4 hour time frame. So a different strategy I use, a 4 hour to 15. Sometimes I use the 1 hour as well when I'm using this strategy. So to kick off, we can notice that price was an uptrend, and we can add our what? Our trend line. You can either use this right over there, and we can see that we were an uptrend, then we broke below the trend line, and be hoping to have a retest at probably a good zone, then go down. But I don't do break and retest. I use the trend line just as a guidance tool. So after noticing we're in an uptrend and we broke below it, we can also notice some good breaks of structure right below this. So we had a good break of structure right over there. And then we also had another break of structure at this point right over here. So yeah, putting that into consideration, we're going to put on our candlesticks and see how and what exactly I did in preparation for this trade. So I want to put back our breaks of structures based on the candlesticks. So this was my first break of structure that I considered, because this low right over here was responsible for the high we had right over here. Then we had also lows at the previous levels here. So on the line chart, this seemed like a double bottom. Though on the candlestick charts, we can take them as relatively equal lows. Yes, so I usually tend to take this as trend line liquidity because they're relatively equal lows, and I look for them to get swept. So as you can see, they had been swept at this point. So considering this break of structure I have right over here, I want to look for the zone that's responsible for that break of structure. So in normal cases, I would like to take this order block right over here. I would want to look at the order block that's right over here to be responsible, the extreme order block over there. But then as you can notice, it got mitigated shortly after it was formed, right? And went below. So I'm going to look for the next region right after that order block. That can be a potential region for price to return back into. Then we look to take it to the downside. So as you can see, I did have a fair value gap or an imbalance right over here, right over there. So it's a high potential area that I would look for price to come back right into, and then you sell it downwards. So the reason I wanted to sell price downwards is because after I had these multiple breaks of structure, I would anticipate a market structure shift. So what this means that since we're trending upwards, I'm looking for price to now trend downwards or a reversal, right? So market structure shifts are one of the good patterns that you can take to trade reversals, right? So this was a very good reversal that gave me some good pips on it. So in ICT, we are told that price moves from internal range liquidity to external range liquidity, right? So looking at this price action right over here, when you broke structure here, that means we're taking out external range liquidity, right? That normally lays at lows, but we can also see relatively equal lows here. That was a good side of liquidity, right? So since we're taking out both the liquidity at this previous low over here, that created the high we have, and we also took out the liquidity on this relatively equal lows, we'll be looking now for internal range liquidity because we have taken out external, right? We're now looking for internal range liquidity so that we can now target more external range liquidity, right? That's the simple concept with ICT, from internal to external, from external to internal. Because in ICT, we say that price is doing one of the two, looking for internal range liquidity to take out external range liquidity, right? So when we speak of internal range liquidity, we're always looking at sometimes trendline liquidity, but in most cases, the fair value gaps or the imbalances of which we have one right over here. So in simple terms, we'd be looking for price to trade back into this zone, then we can sell it downwards towards the external liquidity that we have right over here. So that's as simple as your chart can be. And the next part is just to wait. And as you're waiting, you can always keep looking through to see what price is doing, just in case something changes, because we're in a high time frame and it's going to be a long waiting period, right? So yeah, I'm going to play price and wait for price to come back into our fair value gap. Then I'll go down to a lower time frame and show you I got my entry. So as you can see, price trades but doesn't quite reach. So when price trades above here, it forms this kind of double tops here, which is more build up on liquidity. Those 2 weeks up over there, which also are build up on liquidity. So it gives me more confidence that, you know what, price still has to come back and take out this liquidity, then tap into our internal range liquidity, then we can sell it downwards. So this, in smart money, we call it an inducement, or we're inducing early sellers, right? So early sellers may think that the trader left them and they take in, and their stop loss above this high, and they come back for them later on. So I'm going to play price till it's into our fair value gap. Then we shall go down to lower time frame and see how we took the entry over there. So price plays, so we can see that price forms, comes down and now reverses up. So uh, this is a valid swing point because we're having a 3 point formation, or let me say, like, we're having three candlesticks and we have a left one that's lower, then we have the one that's lowest, then on the right it's higher. So in this is a valid swing point that I take myself. So I'd consider we have a similar pattern here. That's how I determine my swing points. Similarly, you can see up here we have this side on the left, the higher point, then the right hand side is, then on the right is lower. So that's a valid swing point for me. And even in ICT, that's how we consider our swing point. So I'll take this to this point. That's a valid swing as my swing point. So these are also relatively equal lows. That means we're having a more build up on liquidity to the sell side. We have more sell side liquidity or more external liquidity to take out. So what happens in most cases, I would anticipate that if we take this out first, we shall take it, then we shall buy up into what? Into the fair value gap before we continue with our sell. Now, right now, I'm just looking at build ups of liquidity because I do liquidity trading and want to see where price is hopefully going to go first, where our strongest drawn liquidity is, then we can take the opposite direction of the trade. So I'm going to play price again. So similarly up here, so we have formed another high right over here. So you can take it to be a triple top if you want to. You can consider it as a triple top or a double top still. It will still work, but all this liquidity build up, which gives me more confidence that price is going to take out this liquidity, then you can look to sell it to the downside. So I'm going to play price. So we took out the liquidity below right over here, and as I told you that when we took out the sell side liquidity, we always tend to take the trade in the opposite direction, and can see this strong rejection right over here. That makes the liquidity valid. So what makes the liquidity valid? Usually we see that strong push after sweeping liquidity to the opposite direction, which is a very good sign. So now price in our fair value gap, it has mitigated our fair value gap and it has given us a good rejection. So I'm going to go down to a 1 hour time frame and see how we took this entry, because I took this entry in the Asian session. I did post on my status for those of you who are viewing by then. Yes, so I'm going to wait for price to give me something like a bearish engulfing, then I'll enter off based on that. So we had a very good momentum come to the downside and a good fair value gap right over here. So what am I looking for? After having this shift in momentum, I want price to come into this fair value gap, then I sell price downwards. Or in most cases, price sometimes may not actually fill the whole fair value gap. But usually when it taps just the 50% of the fair value gap, I can take an entry for that. So this is a new POI we are going to consider. Just play price shortly. Now that was my trigger for the entry, and that's where I took my sell off. So with my sell tool over here, so I took my off of this because we closed below the 50% of the fair value gap. So that means we probably rejected it. So this was the trade. So stop loss above the previous high, which is right over there. Then we target the sell side liquidity. the downside. Yeah, so I'm going to speed price up. So over there, so I'm going to speed this up a little bit. So how price played out, and that was the trade. As you can see, it was a very simple trade. I just followed a few rules, and we shall get to see how I put these tools together and how we identify the different types of liquidity, and in some cases combine them with technical tools and come up with such simple trades and very good risk to reward trades. So I took 160 pips off of this trade. It took me close to 12 hours almost because I entered in the Asian session, and yeah, I think I hit a profit when it was coming towards the London close. Actually, after the London close, it was about 7 p.m. in Ugandan time. So thank you very much for being here. We shall be going, I think, to the gold trade I took some time back, I think about 3 weeks ago, on the next episode. So have a nice time.